Hello and good afternoon. It's 4 minutes to go to the opening bell on October the 20th. Let's review the market internals last week as of the end of last week. Let's open the drawing tool. Flat to bullish volume, flat to bullish advanced decliners in the end of the day. The ticks were holding, I mean neutral. We can say neutral. And here, if we remove this box, we can see that in NQ during the trading hours, it was close to positive, trading higher after this little retracement. The low was set overnight and it was never retested. That's very interesting because we thought, or I was under the impression, okay, if bulls wanted to take control, this is the way to do it. If they cannot, the bears will have the opportunity to go below Friday's low, which it did not happen. Now we have 3 more minutes. Let's go to the routine. And before that, I want to show you a huge dependency on the world on Amazon Web Services. Many websites, I mean, there are memes all over the internet talking about the services that were down. Even a tweet from Elon Musk saying that it was working, that X uh, was working. Major news for the last 24 hours: Chinese economy slows at trace as trade war, weak demand, Trump pushing India to stop the Russian oil imports. This is what we talked about. Amazon Web Services. GDP slows. It's the same. Okay, this is the issue with Israel and Gaza. Trump urging Zelensky to take a decision. Japan, okay, a new prime minister, female prime minister. Cargo planes lights off, okay, Hong Kong, while killing two airport staff. Fed still poison for cut rate. Okay, so we have to go all the way to the ninth news to really see something that really affect macroeconomic. The first one was, of course, the AWS issue. It seems, let me see if positive. It gives a negative sentiment. Here we have some examples: Perplexity, Coinbase, Robinhood, you know, down. And let's go to the routine. So this is the daily routine, and we have 1 minute to go on the opening bell. We open all the equity indexes, and remember the last link uh, to join and we are open to join the Discord. Here, equity indexes. I knew this is, remember, is from the close of the last trading day. With this is Friday. Broke to the high. Oh, let me move the camera. Broke to the high on the Nikkei. Okay, noting that we still in this range. We went back to the range in China, and we are in a balanced area in Europe with the UK trading a bit lower here. The last uh, zoom, the last trading day of the week, Friday, we have red. We have that the support line was not broken, and now we are having this triangle. So this is how we went on the summer. So on the weekend. So this is um, how every technician should have looked at this: a triangle forming. Whatever side you break, you open the opportunity for the run in that direction. If it does not, okay, so we look for a break and fail, and then for further consolidation, which might not be the case. The S&P 500 year to date is about 13.3. In the quarter, remember, it was negative. This is why CTAs and trend following, okay, so if we are negative, then we have the tendency to go down. Let's push it down, but it fell. We have a gap up. Let's see if we continue to hold that within the next 10, 15, the next 10 or 15 minutes. What do we have here? A negative, a strong down day, scare people that trade volatility, the zero DTE, but in the macro picture, we were trading inside of a range. Here, the response positive, strong, yeah, stronger than in the last recent weeks, you see. But now we have back to back two negative, positive, and now it seems we are back outside of the range. Let's see what the bulls or the bears wants to do. NASDAQ is still stronger, 18.1 as of the close of last Friday. Year to date in key indexes and instruments, we have same last week that every day. Gold stronger, even though we have the first down day in gold. This is now we'll review the trading signals there, and then we have the crude oil minus 18. I was reading some commentary that with oil being weak, you can say the economy is not so strong. The other argument could be said with cheaper oil prices and increasing output, yeah, it's good for the economy. It's cheaper to get things around from one place to another, right? It's true that if demand was a lot stronger, uh, gold and crude was not going to trade as low as it is, but it's not low at all, in my opinion. Very strong equity indices from around the world. US, here is UK, and US about 13. Where is US? Let me look at this here. Mm, okay. US 10 years, the bond, and US. So you see, there is only one equity index is doing worse in dollars, right? That the US year to date from the ones that I track in this chart is India, and then China. So we can see how Europeans and Australia, Japan, Switzerland, France, Italy, Germany, Portugal, Spain, South Korea are doing much better than the US. Even though there are a few stocks that just pulling the money flow, right? And the performance. Bitcoin, something to notice here now. In these four groups, Bitcoin is negative, right? 1 week, 14 days, 30 days, and 90 days. The truth is, for the last 90 days, minus 10, it's about the range. Nothing from this minus 10. Yeah, from last week, it became a 6, but it's not nothing new. It has been building up. Oil, in the other way, you can see in the last uh, 14 days, is not that much than for the last 90 days. So the pressure to the downside is slowing. The pressure to the downside here is growing. Let's focus on gold because we have a trade um, to explain here. So 25 in the last 90 days, 13, 14 in the last 30 days, slow down in the last 14, but the last week gain. And this is not showing, this is as of the close Friday. Let's go right there on that trade. So we open Think or Swim. And this is what we have. We have a new high on the NASDAQ and internals open strong. Let me take a picture of this and send it to Discord. And happy didn't open in the window that I'm sharing. And here, pasted on intraday data, and we can say strong open, strong open. This 6 to 1 in New York Stock Exchange. That is not a joke. 6 to 1 is quite strong. The TIX is 1,400 the high, everything holding. Now is pressing for shorts to cover in the bubbles that we have here. There's not a big jump from the open. Energy is 0.1%. That's the highest from the open. That's a big jump. 1% in 7 minutes. That's a strong opening. And let's go to the time frames, 3 time frames, and go for gold. Hmm. Maximize. Let's remove this from the last commentary. And this is what we have. Let's review it because it's still valid. We were about, we were not about. So let me tell you the exact value that we were trading. We were trading a 4,300. Let me make it exact. 4,300. And we saw on the right level of potential shorts. So, and this box, right? We had the stop. So if we went short at this level, and remember, I am holding long position, very long position from very long term, right? So I'm not shorting here. What I want to say is if this is going to drop 5 or 6%, I don't want to lose 5 or 6%, but it's not going to do it with the strength that it has fast. Or at least I don't expect to do it very fast. It can, of course, but I don't expect. Okay. We were thinking, okay, so this is the risk reward, this is the box. We put the stop at the high. If we have 2 to 1 risk reward ratio, we have to go at least to here. Right? Let me mark that level. Duplicate and move it here. Okay. And edit. Potential. Put it at 80. So we said, okay, if we go 1 to 1 that day, right, it would have just reached the 1 to 1 risk reward ratio, but that's not enough. Having a 1 to 1, it's not profitable if you include commission and the mistakes and trade management and so on. So let's go for the 2 to 1. A 2 to 1 would have been about this, taking this high or retesting this area or close by. And we did not. The question now is we had a very strong day up, an indecision candle, and now we are inside of this indecision candle. If we break to the high, probably will continue higher. If we break lower, probably we go lower. And this is where I want to see if it makes sense to trade here to the downside short, not to have exposure of about, let me see how much would that be from this level to this level. It's about 5%, right? So 5% that can it go down 5% in a day? Oh yes, it can. Oh, definitely it can. I don't think he's going to do it. Think it's going to give me the. I want it to give me the opportunity to be able to hedge, but it can definitely go down 5% in one day, right? So for those first people, families, trusts that have 10 million plus on this product, it's could be a nice hedge, expecting a 5% drop with a limited risk to the upside, right? But it's not easy. You have to be very like a surgeon, right? You have to be able to plan, execute, and profit from a trade like this. You have to be flawless in trading. And some people that I know has those skills. Let's go back to the ES that we did not analyze the ES so far. This is what we have now. And it's very, very, very interesting. We have the big candle from two from 2 Fridays ago. This huge range. We did not break that range, right? It is true that this value here was tested overnight, right? Then it opened and we went. It did not have the strength to take of the high values of last week. Okay. But today, let me see if the internals is still very strong. The internal is still very strong. Energy gave back a little bit. Infotech gave back a little bit. This remember these values here are from the open. These values here are on the change from last close, right? And these values here are for the last 5 days, right? So we have consumer semiconductors being the stronger on the day from from the opening to close, and in the week, real estate. Okay, interesting. Real estate. We'll explore that, and then change. Bitcoin having very strong day. Gold having strong day. Apple. This is the one we want to talk because this is very interesting. And then Tesla, Google, thank you. No. So next, we're going to talk about Apple, and this is what we want. We want S&P to trade high, to trade all-time high. First, he needs to kick these bulls, these bears out, and then the ones are here. So can I do it? Yes. Are macroeconomic factors ready to do it? We'll find out. Apple, break and go. Woohoo! So we have the gap here. See, we had this gap, indecision candle, hammer, gap, close above the top, and now we are. Is this a new all-time highs for Apple? Not yet. Not yet. And this is. I think that this was the high was in 2024 in December 2024. This is what we have. Let me make this on here. Raise this. Uh-huh. So move it here. All time high. This is a target. Go and we say 260. Make it. Where? What are we looking for? So we go to the 15 minutes and we look for an entry that makes proper risk reward here. It's not so simple now. We got the break. If we didn't get long at the close of last Friday, we have a gap and go. So we can go and retest this, and then our risk reward will be here because all time high is very, very, very close. To make this a 2 to 1 risk reward or something like that, or 3 to 1, is not an easy task. I'll pass. I can put an alert. Let me see if I get an alert here. Get stock above, below. And let's see if there is a retest there. And then we can say, okay, fine, we can go through here, enter here with the stop loss on the daily candle, on the daily low, or the previous structure low. But it's not so simple. Here we have a few attempts, but this is the same thing that so the first attempt, then the second attempt, the third attempt, and all of them failed. We close above the high of the week, 1, 2, 3, 4, 5, above the high of the week gap and go. And gap is because of this. This is a very simple indicator. You can download that from here. You go here. So remember routine. This is the link, right? Routine. Go here, download that indicator, a gap, and then that's it. You know, it shows you the gap. Mm, Nothing we can do there. The other place, crude oil, 56. So I want to see if he's able to take today's low. Edit properties, low, over low. Trade. So the play here is not super clear because I don't want to be shorting on weakness, right? So it is healthier to for this to trade higher, like let me erase, like it happened here. And if there is a catalyst, like a lower low, something like that, go, or to trade here where we had the indecision candle, and this was the trade with very defined risk reward. It's easier, s- not easier, but it's smarter, I think, in my opinion, that just wait here now, go short. This easily can pull back here, and nothing would happen. You know, you still short this instrument, or very, or there is a catalyst, right? uh, you are in trouble because then a new catalyst pushes higher, and where do you want to break even? You know, or break even or take the stop loss. You know, it's much harder. YM is not at all time high. Russell, Russell was giving me. Russell is not all time highs. And let's go in Bitcoin because we're having a very strong day after a few weeks or pressure down pressure. And this is the expected value to rebound, right? Previous highs, and if it was going to rebound somewhere, it had to be around this area. There's nothing magical about this. The question is this the beginning of something, a new leg up? Remember, these candles are daily candles, right? Or it's just a continuation of something else? Hmm. I mean, the risk reward is there. I mean, it, this is was the expected value to bounce, the same thing that this was the expected value to bounce, right? I mean, if it didn't bounce in these two levels, where is it going to bounce? Let me change this. I don't like the wicks themselves. I prefer the close than the wick. Um, oh yeah, but now we could in the bear scenario, in the bearish scenario, we can say, hey, this is great now to short. I wouldn't short it. This I wouldn't short this. The you know, but the risk reward is there for a long to all time highs. I don't think it's the other way around. AMD very strong. Let me go back to Apple. Let's see what it did. New high, 50 minutes candle, market internals still holding. Now a few sectors are giving red. And I think that's all for the summary of today. If there is something major that happens throughout the day trading session, we can talk. Let's see, go to front page. Oh, yeah, let me go to the markets around the world. Equities, equity indexes, and then we go to the futures. We go update everything in euros the year to date so we can see. So look, actually the S&P 500 in euros year to date is about zero. It's flat. The NASDAQ, it did gain 15%, but in euros it's about 2. Canadian is about 9, 20% on dollars. Popespa 20 and 22 in euros. Mexico 23 and 24 in euros. The strongest, the euro stock in oh, sorry, it's not here. The strongest is the IBEX in Spain, or IBEX, like you can say. FTSE Italy 22, DAX 21, FTSE Eurostock, CAC, Sweden, Greece, Switzerland, with a 9% in local currency and 10%, 11% in euros. That's very impressive. Frank, Frank, congratulations. China and Asia, we have the Nikkei at 24, 14 in euros, Hansen 28, 14 and a half in euros. So here we have data from 87 to today. I mean, Ray Dalio's fund that is investing in Asia is doing spectacular. It's very done. It's doing very well this year. And my question is looking for 2026. Do they have room to go? And we got some serious resistance ahead, that's for sure. But the resistance are there to be broken. The trend is also very strong. Their daily candles. What happened today? April 3rd. News. News is something called news. Yeah. News. The tariffs. Yeah. May 12th. It was recovered within a month and a half. And for the last, this October, from October to today, it's not doing. exceptionally well, but the year to date is impressive. Mhm. Okay, that's all. I, that's part of my daily routine. Let's see what trading opportunities we have today. This is 4 p.m., about 10 a.m. in New York. I end the stream and